widening the tax base by taxing wealth as opposed to income, as well as increasingly targeting those in the informal sector are some of the options the government could explore to increase revenue collections to fund this year's proposed 3.63 trillion shillings budget. Ernst and Young tax partner Hadijah Nannyomo wants this year's budget to continue focusing on enhancing food security by expanding the acreage under irrigation, as well as subsidizing farm inputs, provision of the Hustlers Fund loans to small businesses, as well as capital projects to grow the economy. Nannyomo spoke to our reporter Regina Manyara about her expectations about this year's budget, and this is how the conversation went.
This is Prime Edition and I am Regina Manyara. Government intends to spend 3.63 trillion shillings in the next financial year 2023-2024. Question is, how will government finance this, and where will it be spending this particular monies? We speak to the experts tonight, and today we are joined by none other than Hadijah Nannyomo, who is a partner at Ernst and Young, to take us through this particular conversation. Thank you very much for making time.
Thank you.
Let's start off with the issue of 3.6 trillion shillings. That's what the government intends to spend in this particular financial year. What are the likely sources, or how is government to finance this particular budget?
Last year we were looking at 3.3 trillion, so there is definitely an increment. And as we speak, the KRA, which is the main financer of the budget, is struggling to hit its target. So we can only have one more source of revenue to beef up or to let the government hit the target. And this extra source of revenue would ordinarily be borrowing. It could be local, domestic, it could be external borrowing. Now the question and the issue, or the elephant in the room around Kenya, is that we already way above our borrowing ceiling. Kenya is over 65% of its GDP in borrowing. And if you look at internationally, we are no longer in the green, just like other countries. We are in amber, almost getting to red. So the question is this a feasible source of revenue that will beef up or supplement the KRA collections, which probably this year would already be in a deficit?
What are the tax measures that that are likely to be put in place to help the Kenya Revenue Authority rake in this particular very much needed revenue?
When you look at KRA, they've been putting in place a lot of domestic revenue mobilization strategies, and in the past years they have effected a few of them. When we went into the COVID season, the pandemic, that whole year, 2 years, they instituted a voluntary tax disclosure program. This really helped in collecting some revenue, and it accounts for some of the wins they've been getting and hitting their target and surpassing it. We had a digital tax, where they are taxing a digital services tax of 1.5% on foreign nationals, as well as VAT. We saw a lot of uptake, voluntary disclosures by foreigners, and this also supported. Now the issue is, at least for the two of those that I've mentioned, these were more or less short-term measures. For instance, if I look at the voluntary tax disclosure program, it is going to take 3 years. So whereas they were getting all that money in, at some point it has stopped coming in, and that could explain why there's a deficit currently. Because when you look at tax, you levy a VAT, it will have an impact on income tax. Depending on what it has, it will have an impact on pay as you earn. It's just a spillover effect of all taxes. So when one was putting through an amendment or a proposal to tax exported services, probably this hadn't been fully looked into or analyzed. Now, probably this will be eliminated or repealed in the coming tax proposals. And my hope is that this will increase revenue from other revenue sources as opposed to VAT. So when you add up all that for government, and now the new era of green taxes, probably in the coming year, short term, medium, up to long term, the target will be hit. But for as far as the 3.3 for last year, and the 3.6, and KRAs or tax collection contributions to the national budget are, we may be having a challenge.
On some of also, the tax amendment proposals is, to integrate, the telecommunications, with the Kenya Revenue Authority to rake in, to even monitor, how much you're getting on your mobile platform and such. Do you think that this is going to rake in more revenue for the Kenya Revenue Authority?
I think it would, but there are a few things to consider. One is the legal aspect.
Yes.
How they will hack this from a legal perspective. Two is that when you look at Kenya and the majority of the East African countries, they are a cash economy, but they've also embraced a lot of mobile banking and mobile transactions. So it would be a good idea to loop in those that are, for instance, they have a house, they are getting residential rent from it, and they are being paid through M-Pesa. They are being paid through Airtel Money. So if there is a link between the telcos, then the Kenya Revenue Authority would be able to trace this. The question here is, do they have the technology to map and analyze all this? We are looking at over 50 million people. We are looking at over probably thousands and millions and billions of transactions. So does KRA or the government of Kenya have the capability to analyze, to pull this data, to be able to use it to the extent that they need to use it to get taxes? So if we are again putting it into the buckets of short-term, long-term, and medium-term measures, this to me would be a long-term measure. They start now, start mapping, look for the technology that will be able to help them assess and pick this. And maybe in the longer term, this could be something that is workable. But I don't see it yielding much in the short term.
What has been the prerequisites? What has hampered, us from having a national tax policy?
The work of a national tax policy is to look into measures, procedures, structures on how revenue is collected. You do not set a tax this year and then next year you're cancelling it, you're amending it. The issue of VAT on export of services, it's in, out, zero rating, it goes to exempt, now it's taxable, it could easily go back to exempt or zero rated. If we had a proper tax policy that says within 3 years taxes should remain stable, that would work. But what is hampering are the conflicting interests. And the two being so intertwined, when you go to Treasury, you'll find that they are working so much and in tandem with the KRA officials, which is a good thing, but objectivity is key here to see that we achieve what needs to be achieved. I think for me that is the biggest issue. And also the mentality, especially by African governments, that when you put something that is positive, in this case a regime that is incentivizing investors, bluntly one would say that is a loss in revenue. And yet ideally it shouldn't be a loss. It is a loss, say, in VAT, but it will be a gain in pay as you earn, it will be a gain in corporate tax, it will be a gain in withholding tax, and it will be a gain when many investors come in and export. This is an export-led growth economy. So you see there's so many conflicting issues that need to be balanced and looked into.
What are the long-hanging fruits for the Kenya Revenue Authority going forward in terms of raking in revenue amid the talk of widening the tax bracket?
So if I look at bringing in revenue, of course the tax on derivatives, it will be a tax, but the question is how many people are trading in it. So it will be a tax, probably not that impactful. Capital gains tax, it will be impactful because many people are dealing in sale of property and sale of assets. The question is, what impact will it have on other taxes? What impact will it have on investor confidence and people coming in to invest? So those will bring in revenue, and they are effective 1st January 2023, so that revenue is already expected to be in. but also things like which are more structural, like e-teams, which they're introducing. That would also help bring in people who have not been paying tax. I still think withholding VAT, if really managed well, would also help, because whoever pays you is the person you withhold from, meaning even if they are not registered, at least that 2% is coming in. So I'm thinking those are low-hanging fruits. But on the other side of incentives, where the low-hanging fruits or the revenues will come in the medium to long term, we have so many incentives that government can institute. I think yesterday there was a forum on special economic zones where they're really trying to rally investors to come in. So if that Special Economic Zones Act is fully implemented and the proposals are implemented, it could bring in a lot of investors and they could pay tax that could benefit government.
Now, supposing the Kenya Revenue Authority actually meets its targets, it's carrying the weight of this particular budget, leaving a deficit of around, more than 700 billion shillings. How is government going to bridge this deficit?
I think government only has one option, and that is borrowing. So government, to me, and the issue with borrowing is good. We all borrow. But one needs to be very careful not to borrow money which is payable in the short term to undertake long-term projects. So if government can get that mix and balance and also negotiates better terms, it could be a good thing. But you'll find that in the past we've been borrowing more or less medium to short-term loans that are targeted for long-term projects like, the roads, infrastructure, dams, and all that.
What would be the impact, of, borrowing locally, especially when the private sector has been saying that they're having it hard, access credit?
The repo effect will take us back to actually less revenue, because if I'm an investor, I'm a manufacturer doing some business, I need a loan, and I'm competing with government, definitely I won't get it, and it means that even my business won't grow. So the repo effect will take us back to, it will just be a vicious cycle. Government will get the money to spend, yes, but again, KRA may fail to hit its target. So you'll find there is no balance, and at the end of the day, the whole target may not be achieved. So from where we sit, one would also look at it in a way that can government also cut on its expenditure?
Now, government also intends to issue a sovereign bond in the next financial year, 2023-2024. What do you think would be the incentives here, especially to our international would-be lenders?
The competitive advantages are many. For instance, Kenya has already put up the Nairobi International Financial Center. That alone would give investors confidence that the future is bright. Kenya is party to COP, the Conference of the Parties, which is looking to climate change. That is the big deal across the whole economy. The climate is good. They are working towards a better future. So all the cards are in Kenya's favor. We haven't yet hit the red. Yes, we are in amber. So I think it won't be such a big issue around them not getting it. Again, going back to issues of contract negotiations and terms of negotiations, that is where the catch will be. And also knowing that you're competing against other economies that are in the green, that are better off and are better planned. So what government needs to do in this case, it needs to balance its priorities.
Now, and you intend to issue another Eurobond, the sovereign bond, so to speak. From a technocrat point of view, is this wise? Is this the right time to actually do that?
I would say it's not the right time, but if it's happening anyway, we need to go back to a local currency economy where we are using less of the dollars, where imports are monitored and they are not more. And that is why we are talking about incentivizing investors so that we have more exports. We need to focus more on exports so that the foreign currency comes in and the dollar gets to a better level of trading. So for me, I think it's a matter of balancing. It's not ideal, But we need to have policies and efforts towards ensuring that we have export-led growth, towards ensuring, if it means putting in laws and regulations that ensure that everything is not dollarized, if I could use that term. Because when you look at people renting now, I'm staying in Kenya, why should I pay rent in dollars? Why should I go to a shop and I'm told I need to pay in dollars? All that is exacerbating the issue and exacerbating the issue around the dollar being the Kenya shilling weakening and weakening further against the dollar and other currencies.
If you were the one on the seat calling the shots in regard, to Kenya's issue on debt servicing vis-a-vis development, how would you go about it?
I think I would tackle two things. To me, and maybe I could be talking as an ordinary person, I'm mwananchi, but I feel like there are small levers that can be tapped within KRA that can yield better results, very simply. If we go back to two examples of digital services tax, within 6 months, the then Commissioner General was seated telling press how it has worked so much and how it has raked in dollars. Voluntary tax disclosure, those are very short-term projects that were taken on and they yielded. So I'm sure we can come up with many more short-term projects, work on the hygiene factors of customer care, factors of taxpayer education, and for me I think that can make a big difference. The other issue is trying to see how we cost cut. It may not be easy because some of cost cutting may get into the political arena. Some of these are political issues which may not be easy to achieve, but that could also help. Then one would, at the third stage, then look into borrowing and see how feasible that would be. But as it is now, if we don't work on KRA, which brings in the money that finances the loans, then it may be a problem.
What do you think are going to be, the priority spending areas in this particular budget?
From the budget framework paper, we saw that education was leading the pack. Then we had education. Then we had energy, infrastructure, and ICT, 18.7. Public administration, 13.7% of the budget. Now, I have no problem with that, and it's justifiable. The question again is, I think we need to go back to the drawing board and always think about bucket all these measures into short-term, medium, and long-term. Let's take an example of education. Right now, we are struggling with a weakening dollar. We have a debt crisis. We are having deficits with KRA. If we put all that budget into education, when is it going to yield? This is a long-term project. So if we are trying to push and ensure that we are going to have some quick wins, do away with a few of the bottlenecks, then investing so much in a long-term project at such a time may not be a good idea. The time we were fighting the COVID pandemic, it made sense to have health as a priority because that was urgent and it needed to be done. It was a short-term issue. Now I see health has been pushed at the back burner, which also makes sense. Now coming to energy, infrastructure, ICT, it makes sense. We are trying to drive energy project. We are trying to see that we get ahead in infrastructure and ICT. But looking at infrastructure, everything has gone into infrastructure, and these are also long-term projects. So from where I see it, I would imagine that if we want some quick wins, we need to find those years where we say agriculture is key for us. Tourism, what do we need with tourism? It's a cash cow. Kenya is already self-selling.
So in a nutshell, Hadijah, what areas, what sectors would you prioritize in as far as spending is concerned if you are the one calling the shots?
I would prioritize tourism. I would prioritize agriculture, and that goes along with manufacturing. I would still look at ICT, infrastructure, energy, but education would come midway for me. Health, currently would also become midway.
Very well said. Now, we have been seeing a series of changes in key institutions of government. I'm talking about we're planning for a transit within CBK. We're also looking at, changes within KRA. We're also seeing changes within the Kenya Ports Authority. First of all, let us look at investor confidence. These changes, what impact have they had on investor confidence?
So the moment we see that there is change somewhere, we expect a raft of many other changes. Positive, negative, but again the impact will be there in terms of a learning curve, in terms of things going back to normal. Let's take an example of KRA. I think between the time we're in the COVID pandemic, from 2020, 2021, 2022, we've only seen changes at top management. A lot of changes. And when I talk about changes, I'm trying to map between myself, I have an audit, I'm being audited, I actually need to pay the government 1 billion Kenya shillings, I have gone to court, an appeal process and a conclusion of an audit properly could take 4 years. So change, and especially in institutions where it is happening so often, like for one reason or another, and I'm sure there is good reason for the Revenue Authority to always have the change it has had, it also comes with the effects which are negatively impacted.
Now, what recommendations would you have, to have, a transformative economy?
So for me, I think economic transformation would get back to not focusing so much on taxing the economy, but first fueling it, incentivizing it, ensuring that there are incentives that will boost the economy, and then everything else will fall in place.
Now, what would you say this budget has in store for small, medium enterprises?
I wouldn't think there's so much of a focus, fortunately or unfortunately. When small, medium tax businesses are being talked about from a taxman's point of view, they're being pocketed into the informal sector and into maybe that part of the business community that doesn't pay taxes. But that is not the case. And we've seen that some SMEs are quite big, they are quite structured, they are formal. So that mentality may need to change, and probably the Revenue Authority may think of even having desks for SMEs, specifically focusing on SMEs, and trying to maybe look for them a more simpler tax regime.
Now, what should Wanjiku expect out of this particular budget?
I think the expectation is that generally there will be increase in taxes. We already saw an increase from 5 to 15% in capital gains tax. We are seeing deficits. So we are going to see a lot more measures that are geared towards raising more revenue. Low-hanging fruit for government, excise duty. Always get the beers, the soft drinks, alcoholic beverages, spirits, wines, all that. Tobacco, and increase the tax rate. There is the annual inflationary rate. That is a given, it will be added. The indirect taxes, I think those have reached their bliss point or the point of no return, so not much there. But the low-hanging fruits lie within areas like excise duty, instituting some more around the income taxes like the one on derivatives, interest restrictions, so that the profits are more and there's more tax from an income tax perspective, capital gains tax. All those will remain, and the scope of the scope of VAT on foreign suppliers, which is digital supplies in a marketplace, has also increased. In the past years, it was only for business to customer transactions, but recently it has brought into the ambit of tax business to business transactions. So that is one that is also going to bring in a bit of some revenue. The difference is now, if it is between B2B businesses, then the business that is in country can be able to claim that VAT. But one should remember that some of the businesses are not registered for VAT, so tax would be achieved by the government.
Parting shot, Madam Hadijah.
I'm hoping that the plan for the new government to tax first wealth, property income, and lastly trade will come through. I haven't seen anything on paper around how they will achieve that. But first of all, it's a good way to think. Trade should come last in the rankings of taxation. So I'm positive that as we move on, things will get better, and the economy will boost, will grow and bloom.
There you have it. We have been speaking to Hadijah Nannyomo, who is a tax partner at Ernst and Young, in regard to what you need to know ahead of the budget presentation that is set to, direct and give guidance as to how government is going to spend the 3.63 trillion shillings that it proposes to actually spend in the coming financial year. You've been watching Prime Edition. I'm Regina Manyara.